Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to look at a trade that I mentioned in a prior video. I'm going to look at a follow-up trade for next week, and we're going to talk about ways to identify good trades next week and going forward, both from an intraday point of view and a bigger picture point of view. But before I do that, let me just make sure that if you're just finding us on YouTube, please make sure to subscribe to our channel. And if you're not already familiar with where you find these videos on our website, go to marketgauge.com/tutorials. You'll find lots of other posts and videos along these lines. And finally, make sure you're watching this in HD. Check the settings in the lower right hand corner of the video, and it'll be a lot clearer if you check HD. All right, so just before, going back to a post that I put out here right before the Fed, right around here, I said to focus on ITB or XHB. Both are home building ETFs, regardless of what the Fed announcement was. And the idea behind that was that ITB was setting up nicely, consolidating above its 50-day and 200-day moving average, much different than the overall markets. And if it were able to break and start running above this level, it would be a momentum trade you want to follow. Or, which was the case, it didn't break and continue. Instead, with the whole market, it pulled back. And I said, if the whole market pulls back, look for it to hold around these levels. Why? Because you got a 200-day moving average here, you got a swing level here, and you have further support there. Right now, the 200-day moving average and this whole setup has a lot to do with market phases. Mish just did a great webinar this week on trading market phases. If you didn't see it, I'll put the text link to the replay in this blog post. Please go check it out before the end of this weekend, and we'll take it down. This is a way that you can identify which stocks are worth trading from the long side or the short side, and when, and how you can know when the market's going to be much more forgiving for longs, whereas right now you're basically trading in a bear market. So market phase is a big part of it, and also a big part of this trade that I'm explaining. As you can see, I was waiting to see whether or not it would hold, ITB would hold around the 200. And it did yesterday. I actually got into another stock yesterday related to this. I'll talk about that in a second. And today I got into a little bit of a ITB with a stop, which would be somewhere under the 2650 level. Again, my objective is to see if this thing doesn't take out the whole move higher. Now, I don't expect that to happen if the whole market falls apart, and the market looks terrible right now. But if the market turns around, this is one that I want to be long early. And so understanding these phases and the way Mish will teach you in the webinar will help you do that. Now, the other stock that was even more compelling based on yesterday's action. So let's take a look at yesterday's action here. You can see it took out this low and then it came back. Now, that was also true somewhat of the overall markets. It wasn't a strong day in the markets by any means. In fact, it was looking really negative in the beginning of the day. Having taken out this 2 days worth of consolidation, markets were looking pretty bleak. But as the markets were falling apart, there was the ITB, which was holding pretty well, right where I would have expected. So I looked at Lennar, big component of ITB. And Lennar, again, sitting right on this 200, was not breaking down. And then I used a tactic that I've talked to you about in these blogs and in some of the free webinars I've done about buying near the low of the day. And let's take a look at Lennar yesterday. So yesterday, let's put the SPYs at the bottom. So I've got the SPYs on the bottom chart, and I've got Lennar on the top chart. So whether you're a swing trader or you're a day trader, and this is actually a really good example of using day trading tactics for swing trading entries. Whether you're a swing trader or day trader, understanding how the opening range works is incredibly powerful. And so yesterday I got into some Lennar as a result of this opening range pattern. So the SPYs, as we just talked about yesterday, opened lower. This is a 5-minute chart, and this line is the 30-minute opening range, and they continued lower, breaking down, which is bearish, right? It's bearish until they come back up into it, but you don't know if they're going to come back into it by any means. Now, while the SPYs were hanging near the low of their opening range, Lennar went from the low of its opening range to actually taking out the high of its day. This caught my attention. And then when the SPYs broke down to new lows of the day, Lennar didn't even get close to its opening range and in fact consolidated right under its opening range low and the low from the prior day. So when the SPYs came back into the opening range, Lennar broke out. And that's when I got into Lennar. I knew I had a great stop under the low of the day, which would also line up with back under the 200. So I really got my risk nice and tight, both on a daily basis relative to the phases and an intraday basis using the opening range. Right? So I've been able to take out half my position, so it's now a completely no loss situation as long as I get stopped out down relatively close to my expected stop. And I'm now in at a great level, with the objective being that it's going to go back up to new highs. Now, I don't think it's going to go back up to new highs unless the market holds up, but if the market holds up, I'm willing to hold it to see if it makes it back up to that level because I've gotten such a great entry. All right, so this puts together a couple of really simple things. The market phases, you can learn about that in Mish's webinar, and the opening range, which I've also talked about here, and starting with that ITB trade, which I was paying attention to before the Fed made its announcement, with the objective being either buy it down here or buy the breakout as it moves up there. Right? Now, here's just one other example. In Mish's webinar, she talked about Panera. And she talked about Panera and buying it on a little bit of weakness. So what happened this morning? This morning, again, here's the SPYs, and this time Panera. So Panera opened higher like the rest of the market, and then sold off and came back right down to its opening range low. The SPYs also came down to their opening range low. However, if we take a look at the volume, if you've seen any of my videos or webinars on buying near the low of the day, we got the reversal pattern right near the opening range low. Then we got the biggest volume bar of the day following that. So that's a key confirmation. So again, a really tight stop of buying just over 190 with a stop probably down near, let's call it 189.50. Under 189.30. So maybe you're risking $2 at the most, and it winds up rallying almost $3 from your entry point. So you got at least your risk to take out half if you wanted to enter as a swing position. And perhaps even more importantly, you can see that the SPYs fell apart, coming down below their low of the day. But Panera held up. All right. Now, one of the reasons Panera is going to hold up, or is likely to hold up, is because the phase that it's in. All right. So combine your opening ranges with the phases. It's an incredibly powerful combination. And as I said, you can check out a free webinar on the phases this weekend. Check out the replay and keep an eye on these opening ranges. I'll leave you with one last comment about the opening range, and that is if you just take a look at today's action intraday, This is Friday. Both the Qs and the SPYs both gapped up. They looked pretty good. And the SPYs actually started to run and took out their high of the day. But if you're focused on the opening range, and you've been listening to some of the stuff we teach in this blog, you could see the Qs were not anywhere near that. And IWM, if I pull that up, was not anywhere near that. So you kind of knew that this was likely to be a head fake. You didn't necessarily know the whole thing was going to fall apart, but the Qs and IWM and the SPYs are all in very bearish phases. So failures like this is something to be expected. You want to look for things in good phases, strong phases, to follow through, like the Lennar, like the Panera. All right? So put them all together, markets will be a lot easier for you. Hope that helps, and I'll see you in the next video.